All right. Good morning, everybody. What's going on? It's Monday, March 7th. Welcome to a new week. 10 a.m. my time. Prices of Bitcoin currently at 38,800. We had a very, very nice spike overnight, right into the local highs right over here. Um, the funny thing about this movement that we just had was yesterday, I had taken a small long position, and I let Advantage members know about this, right? I had taken the long basically from this 38.4 marker. So what had happened was this wick right here. Okay, so see this candle, this big hammer candle. I said, okay, that's a good looking candle, right? Why? Because it had basically swept these lows right here. And then once again, right, prices spiked up. And then as soon as we went long, literally like 15 minutes later, I swear to God, the worst luck, you start seeing this noise from the news cycle come out. And it was talking about, Russia says Ukraine security service is planning to blow up a nuclear reactor. Like, I can't even make this up. It literally happened like 15 minutes after taking that trade. And then, of course, as I had said in yesterday's video, which I should have followed my advice on, which was on the long side, it is much easier for your longs to get torched as soon as some bad news drops out of nowhere with this, Russia, Ukraine stuff, right? And lo and behold, literally, 15, 20 minutes after we take that long, this happens, up, boom, we get stopped out right below this low. The market then consolidates overnight and then spikes up. And then guess what? It basically gets to our target. Okay. Remember, our target, which I had mapped out, was right around this local high, right? We basically hit that overnight. So our thought process was good. The timing was bad. The luck was not on our side. And that's how it's really been for the long side. Okay. But guess what? We took our chance. It was a good trade, in my opinion. The risk reward was good. You can't really predict that even after a nice liquidity sweep like this with this very nice hammer candle, that some crap about Russian news is going to come out and then market's going to nuke. So remember in this market that if you are thinking about going long, as I said before, you have to be far, far more cautious of your long positioning because the overall trend in the market is down, right? So when we went long yesterday, we knew right off the bat exactly where our stop was, where our take profit was, okay? You have to know that right off the bat. Do not take longs with the hope that you have caught the bottom of the century and that from there, the market is only going to be in up-only mode. This is probably the biggest mistake that most traders will make in the coming few weeks, in the coming few months, and they've probably been making it for the last few months, right? So on the long side, even though we got stopped out, it was like barely, 1.2 R stop, okay? We took maybe like $120 total loss on our trade. On the 5K count, that's not that big of a loss, right? So now that that's happened, once again, we are reestablished in our cash position, okay? In the 5K count, that's all we've been really doing is just sitting in cash. If we see something to the long side, we'll pick up some spot, but we want to see enough momentum building on the long side. For example, after the move yesterday, this move overnight, a lot of traders, if you look across the board, the sentiment has shifted. Okay, the fear and greed index has quickly went from aggressive fear yesterday right here to then starting to tick back right into local euphoria levels. Okay, but guess what? Nothing has really happened, right? Nothing substantial has happened other than the fact that the point at which we dropped yesterday, okay, or what is it? Yesterday or 2 days ago. The point at which we dropped, we basically came back to that same high and we basically took out those stops right there. So we have not really accomplished anything. Whether you look on Ethereum, whether you look on Bitcoin, whether you look on any other altcoin, okay? Here's how altcoins look across the board, okay? Nothing has really happened. So do not get excited right away because as I've told you all before, in bear markets, right, you're going to have the most violent, upside rallies and they're going to be incredibly hard to catch. If you don't catch the rally close to the bottom or pretty much right near the middle and have an exit strategy to get out of your long position, you're going to be caught holding that long because you're not able to flip your buys. You're not able to take that profit. So your long will quickly turn into break even, and your break even will quickly turn into losses. It's as simple as that. So I urge and encourage you guys on the long side, be cautious, be quick to take that profit. Okay. Don't worry too much about missing, the generational bottom or whatever. Okay. Because the market that you're trading right now is a market that requires a little bit more finesse, a little bit more flexibility. All right. And I think at the advantage side, I think we've done that pretty well. We've basically traded both sides of the market. As of right now, if I were to look at the market and say, is there any position to take? Yeah, I'd probably say, okay, well, if this is a local bottom established where you've taken out stops from here and here in ETH, right? If that's like the temporary bottom, well, you place your stops right at this local low. You take your long right here, first target profit right into this high, which is about 26.75. Next target profit, 27.75. Okay. Those would be, your upside potential target markers. Now, if you look at things on the weekly basis, whether it's Bitcoin, whether it's Ethereum, things do not look good, right? On the weekly basis, especially, it's not really a good look on the market. It is entirely possible that, yeah, maybe we put in, the temporary low of the week, okay? But it's also possible that this movement right here, and I'm going to steal this idea from, I think, one of the members who posted about this. This movement right here is analogous to something either this bottom that happened back here in 2018 and 19 before the big pop, okay? Or it's this right here, multi-week consolidation, okay, sideways, where volatility completely dies out, and then a big breakdown. Honestly, I have no clue where we are. If I were to put, probabilities on something, I'd probably say we're, 60% probability here, 40% probability here. Okay. Or I could say 60 here, 30 here, and then 10% is more just sideways, up and down, more chop, more volatility over the next, 1 to 2 months. Okay. That's how I would lay down probabilities for scenarios like that. Now we've talked about, this area where price is just gravitating sideways is basically right above this key support level of 30,000, right? This is where price was initially bounced from back here in June and July of 2021. Well, if price is hovering here, right, and we're pretty darn close to key support levels, the longer it spends time in this particular area, the more and more paranoid I get that we're actually probably going to break down further. Because as you guys know very well, in the basics of technicals, once you come back into a key support level, especially so close to one like right here, okay, you don't need to sit at those levels. You don't need to spend so much time here because a strong support level has basically, allowed you to absorb and defend the sells right here and quickly rebound you back up. Okay, so the fact that we're spending here so many weeks in a row, given the fact that we already spent that much time last summer, is making me a little bit paranoid. And the same goes for altcoins, right? If you look at Ethereum right here, this is, one of the key SR levels for Ethereum right here at this key low. Another way to map out a key level is probably like somewhere around here, something like that. Again, we're basically, below both those levels. And in fact, you're kind of just consolidating downward in this bear flag type thing in Ethereum. Same thing with BTC. So all in all, what this makes me think is if we see pops in the market, okay, especially like days like today, wait till the point where, people get aggressively bullish, but right into key points of liquidity and key points of resistance. And in this particular instance, I would say that a key point of resistance could be right around this $39,000, maybe $40,000 area where price does something like this. This might be an excess and a failure for a breakout. Price comes back inside this range, and that's your short right there. Stop above here. First target profit, February monthly open. Next target profit, these lows down here. And then the final target profit is probably around 36,650. Okay. And the reason I say that is because I'll tell you why I look at 36,650 as a key level. Okay. So where's my chart? Okay. So this $36,000 marker, right? This is the last drop. See that right there? This is a last big red candle before this big up move. Okay. So anyone who is selling this thing on the way down, they got completely absorbed. And then the bulls said, okay, we've done all the absorption. Now we're just going to rip prices up. Okay. So the fact that the buyers were able to absorb everything that the sellers gave to them in this particular tight range, and this was a low that they put in before they rocketed that thing up, this is the last point of defense that the bulls will once again have. And ideally, what I'm thinking of a situation is if we get to sweep this low, that is a ton of liquidity taken, right? I would figure a lot of people are going to get stopped out. A lot of people are probably going to short at this low, and they're going to say, oh, well, we took out basically these two huge candles. So that means we're going to break down straight down to 30K. See, I'm actually against that idea. I don't think that from here, just because we break down like this, we have to go down lower. I actually am of the opinion that this might be the perfect trap. Something like this, reclaim, and then head up to yearly open and maybe a high squeeze of 51 to 52K. I know it sounds insane right now, but I'm just talking about the scenarios that I don't think most people are expecting. And I'm talking about scenarios where I could see a lot of participants come into the market, whether from the short side or the long side. Because when a market overall has been in a completely chop fest, down mode for several months, it is oftentimes looking for points of liquidity to draw in as many participants from the long side and the short side. How does this draw in people from the long and the short side? Well, from the long side, people will say, okay, well, this might be just a quick sweep and we're hoping for a higher low reclaim, and then this should take off, right? That's a long side logic. The short side logic is, well, these two candles got completely wiped out by this down move. This trend line right here, it looks like it's breaking. So the short positions are looking at this and they're salivating at the mouth. They're like, oh my God, I mean, this trend line is breaking. This low that pushed up the initial move is breaking. I'm going to short, this thing down to basically 30,000 or 20K. That's the optimal, strategy for the bears. And if you short here and the market fails to break down and it actually does something like this, guess what? A lot of these short positions are going to get squeezed out real fast. Okay. That's how I'm thinking both shorts and the longs are going to be drawn into this particular key level. And I talked about this a little bit on my Twitter feed. I'll talk about that in a second. I kind of just, pointed out, I don't really like to poke fun at people, but, this was kind of interesting to me, which was Willy Woo. And there's this guy, Will Clementi, or whatever his name is, right? They're sort of big on-chain analysts. And in my opinion, on-chain analysis has been kind of a joke for like the last almost several months, because every time the market goes down, there are some good metrics that are pointed at the market to say, well, this is the time where, market can bottom, right? You could always come up with some metric to say market has bottomed and, bulls look good and short-term sellers are selling and long-term whales are buying, yet the price keeps going down and the overall market doesn't look good. And then you have the macro noise. So, it's kind of been like hilarious to just watch the conviction of, on-chain analysts all the way down, basically from the highs of $67,000, $68,000 and even into the $30,000 low, or rather the $33,000 low, right? So that to me has been kind of perplexing because, a good analyst looks at new points of data and says, hey, the data is saying this, but the price in the market is not reflecting that. So good analysts are able to tweak their formula to take in more information from price, because at the end of the day, the market is always right. It doesn't matter what your analysis says. What does the market say after you've done your analysis? And so the point is that, these people have not shifted their bias the entire time. And it's just kind of annoying because I know a lot of people kind of pay for their memberships or subs or really just, pay attention to them. So be careful of following this on-chain analysis data because so far it's been honestly horseshit. So again, no offense to anyone who follows on-chain analysis, but, just look at both sides of the data points, where you could be wrong, where you could be right. Okay. Now let's get to the other parts of the market. I had kind of made a joke about, how there could be sort of a destruction on both sides of the market with, let me see here, a couple of things right here. Okay. Number one, we spoke about this, 3-month big bullish candles that we see right into the highs. Okay. This is an important point. When you start seeing this 2017 candle and then this 2019 candle right here, these are two big 3-month bullish candles. Okay. And after these 3-month bullish candles are put in, several months later, maybe even a year and a half later, you can see the lows get taken out after those 3-month bullish candles. Now, obviously, this is in retrospect because I wouldn't have known that this 3-month bullish candle was at the high of the overall, quote unquote, resistance or the trend. In the same way, this 3-month bullish candle, in my opinion, is the high of the local trend right here. Okay. So that means that if this 3-month candle in 2017 and 2019 got taken out with these two X's, right, we took out those lows both times, I think there's a decent probability that this low of this 3-month bullish candle right here in 2021 also gets taken out, which is a low of 27,650. Okay. So that's, one thing I'm kind of paying attention to. All right. And then altcoins wise, I think altcoins are still going to be choppy. I had this scenario that I mentioned to Advantage members. What was it? I think it was like for stuff like Luna. And I was kind of hoping that Luna would bounce off this, trend line right here. It didn't. So if it's going to come down, well, where could it go to? Well, it could easily go to $75, or similar to how BTC is about to sweep this entire bullish move, what if Luna and some of these other assets do the same, right? What if Luna sweeps its local low right here, right? Does something like this, reclaim, and then heads back to take out this previous all-time high. That would be sort of the biggest middle finger scenario for Luna, okay? There's other assets where I pointed out similar scenarios. Atom, same thing, right? Atom is very close to this key higher low. What if Atom does something like this, where it sweeps this local low, and if it reclaims this level, goes back to $30, goes back to 35 right here, and then goes back to previous all-time high way up here around $44, $45. Okay. And the reason I'm mapping these scenarios out is because in these market conditions where things are so aggressively bearish, right? If you start seeing that key levels are being broken, for example, in Atom or BTC, you start seeing these higher lows broken, but there's a failure for those higher lows to, break down like that. So if this is your higher low right here and price breaks that and does something like this and starts breaking down, that's fine. Those are easy to short. But the toughest times to long, in my opinion, are when the market does something like this, does something like that, and then reclaims this level and it starts moving up and away. This is the time where everybody, is too scared to long. And in fact, they often find it easier to short. And that's the worst time to short, in my opinion, when these levels are reclaimed like this. So I want us to pay attention to these markers on Rune, on Luna, on AVAX, on Solana. We're going to be watching these levels carefully, okay? And again, as always, I'll let y'all know if I do or don't enter in any positions, longs or shorts. So yeah. IMX had an interesting day. Yes. So there's a lot of news about IMX. They had some investor valuations that came out. IMX token. Let me see here. So the news was, let's see here. IMX plus GU token, a fully diluted valuation is about $3 billion right now versus the $2.5 billion that they paid in the round. So I'm glad you mentioned this because guess what? IMX is on Coinbase, just FYI. It's also on FTX, both of the exchanges that I trade on. So 4-hour candle, massive 4-hour, right? Hard to say anything about it. Can it go further from here? Yeah, it's definitely possible, but it already put in like a 35-40% move already. So if you're going to pick up levered positions, be very, very careful because guess what? Your stop has to be way the heck down here. Okay? If you're going to go spot in hopes that this thing pumps higher, okay, that's fair, but also have an exit strategy, right? Know like where you're going to get out. I don't know, maybe your exit is 142 or somewhere down here around, 125. Okay, those are pretty deep stops, just FYI. A 142 exit from here down is about 8% drop. A 125 exit is about 20% drop. Okay, but nonetheless, very, very good news, right? Having high valuations for something like IMX, which is part of the NFT space, in a market that is already really struggling, it's a good thing, right? I mean, it pumps the bags. That's all I could say, but I don't know if it's, a new trend starter, right? Like think about it like this. Okay, if IMX is part of the NFT space, well, what has been happening in the NFT space or crypto in general? Well, overall, most of the NFT mints that are coming out, not really gaining that much traction. In my opinion, a lot of them are cash grabs. There's not really that much like, potential upside hope when you start minting these new projects. Even, good collections like Bored Ape or the Crypto Punks, they've actually started to lose the floor prices, right? So that is definitely something that as NFT traders, we need to keep in mind. If the best of the best projects in the entire NFT space are struggling, something is probably off, right? Maybe the market is finally weighing on the NFT space, is not able to garner enough money, enough attention, enough user activity. So one should be careful, okay? All right. What else can I cover? We talked about BTC. We talked about, near-term pops that we could get to. Talked about weekly and monthly analysis. Let me see. This is kind of interesting. So this morning, NASDAQ popped up big, right? And right at market open, boom, sell-off, okay? Or not a sell-off, but, like reversing that up move. The interesting thing about that was, if you look here at the German index, the DAX, okay, that also popped up overnight, okay? If that starts to roll over, along with the S&P 500 and other, areas of the U.S. markets, not a good sign, okay? So here's how the German DAX had opened last night. It opened way the heck down here, started to close up that gap, okay? FTSE, same thing, which is the UK index right here. I'll just go to this one. All right, had a big drop, pop back up, decent hammer candle. Who knows? Maybe temporarily we might have put in a local low in the stock market. Okay, but guess what? The US markets, they're not done yet, right? I mean, they still don't look that good. So this, in my opinion, is probably one of the scarier things that you need to pay attention to, because the US markets, the stock markets, are the most liquid markets. They have huge derivative volumes as well. Traders from all over the world, sovereign wealth funds and banks and institutions from all over the world trade the US markets far more. So in my opinion, the US markets are a better litmus test for exactly, what's going on in the stock market, what's going on in risk assets. So if the DAX and the FTSE are some indication that we have a temporary bottom, I am hoping that that is somehow reflected in the US markets. All right. I posted this article, Coinvexity 3, in the official announcements right here. I hope y'all check it out. I'm halfway through it. Really, really good article, very informative. As y'all know, in the crypto space, right? I mean, you have to be able to ingest like a lot of information just to keep up with things, happening in and around the space. And I find reading, other people's work, even if it's sometimes things that I don't agree with, reading other people's work is very, very helpful when they disagree with your own bias. It keeps you kind of, balanced in your own opinion and your own bias. Okay. Am I not looking to short here then? Not really. I would really like to, but I mean, I need to, this is like no man's land, right? Like, what am I doing here? I don't know what's happening, right? We're right under resistance, but I can easily see price pop up above this area, and that would be a better risk to reward trade for the short side. Or I wait for the market to come sweep this low that we spoke about, this $37,000 level. If it reclaims this level, possible long back to this high. If it starts breaking down from this level, then that's your short. Here, I don't really know what I would be doing. Okay. So yeah, I'm caught in the middle. Not going to force a trade right now. If you guys would like to go short, there are some pretty good opportunities to go short in basically any of these altcoins. As I mentioned, you can aim for the short target profits. For example, for Luna, 75 is the first target profit. 70.5 is the next target profit for Luna. And then Rune, I would say Rune is probably going to break down to like $4 or $3.85, somewhere over here, possibly. Okay. I mean, it should be bouncing now if it's supposed to bounce, but it's not. So, we have to just assume that this thing is going to break down lower. And one of the reasons why I found out that, Rune actually popped up in a big way was because Rune is allowing the Luna ecosystem to exchange Bitcoin to UST. UST is the stable coin for the Luna ecosystem. And Rune is the platform, the formula, if you will, that is allowing Bitcoin to be easily changed into UST stables. So that's one of the reasons why I found out that Rune was going up. Let me see if I can find that for y'all. Yeah, I think this one right here. I think they talk about it somewhere. Swapping UST or Luna to BTC. Okay, yeah, there you go. And I think it's vice versa. So yeah, I think this was what the big news, big reason why Rune was up. Okay. So anyway, keep that in mind. All right. All right, everybody. Thanks so much for watching. I hope you guys found the analysis helpful. I'll keep up with y'all through the day. All right. Cheers.